everybody, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday, ladies and gentlemen, Friday the 11th of July 2025. Look, this is a quick video preview for the webinar which is going to happen in a few moments. Basically, we are going to talk tariffs because at the moment the US is firing tariff bullets at everybody. Yeah, look, we're digging into all that, and we'll see how the market is behaving, how it has been behaving throughout this whole week, and yeah, hopefully you'll enjoy the session. Stick around. Alright, ladies and gentlemen, hello and good morning everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today's finally Friday, ladies and gentlemen. Yes, we have the 11th of July on our hands of 2025 still, so yes, welcome everybody. We all made it to this day. Not that it's something specific or anything or something like significant happening here today, but no, just in general thing. Another day, another us in this world, ladies and gentlemen. Welcome. Look, I wanted to talk about the markets. Well, basically, as I always do from Monday, on Monday, Wednesday, and Friday, basically. But on Fridays, I normally wrap up the week, and yeah, we're gonna do exactly that. We're gonna look at what's happening, what has been moving this week. But before we jump into all that beautiful thing, honestly, talking like one of the known leaders, top leaders of this world, beautiful, gorgeous, and all that, all those other adjectives. Anyway, let's have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Look, let's also mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Let me just actually do a quick good morning in the chat room. Good morning, everyone. That's what I normally do. This is how I try to encourage you to communicate a little bit more with me on the show. And I think that, yeah, that always helps. And we sometimes you can even point me to something that I have not maybe looked at or maybe missed out on. So yeah, that's what I call a dialogue and cooperation. Look. Let's jump into the charts. Let's have a look what's happening here with the Japanese Nikkei 225, and we know that we are currently this week we're going through these tariffs, and that's why I have called this this week the tariff week, basically, and then I just wanted to show you what I'm talking about here. Bear with me one moment. Basically, this is where on YouTube, on our YouTube channel, the week ahead, I named it as the week of tariffs with a question mark. Well, to be honest, it wasn't wrong. I wasn't wrong in this, and yes, the tariffs were there and tariffs are here, and I think the tariffs will continue to be the number one topic. I think while we're in this under this White House management, let's call it this way. Look, what can I say? The tariffs came out, and the threats, somebody's like, they're already trying to place that on. In general, I'll say it this way. I'll try to sum up what's happening right now. So recently we saw the big headline that US is planning to put like 35% on Canada, on more than 25% before, basically like accusing them of different things, that still fentanyl is coming through Canada and blah, blah, blah. Anyway, I think it's all a nice show. Everybody's trying to, you're trying to find reasons for putting, a bigger tariff or anything like that. And we know that Japan is also under threat, and everybody's under threat. But what happened this week was that initially we had a deadline of the 9th of July when all the tariffs had to take go into effect. But then Monday we started shifting towards like different wording a little bit, like maybe it's gonna be like 1st of August, and then nobody knows. But then on Monday still one person says that no, we're gonna stick to the 9th of July, but then the other person says what, actually it could be August 1st, but then it quickly shifts everything. They suddenly say, they say suddenly altogether that yes, it's going to be 1st of August to allow the U.S. partners to kind of negotiate a deal and stuff like that. So, I mean, okay. I call these tariffs are kind of threats in order to, achieve some sort of like a little bit of a higher tax on goods. So it's something to do something like a VAT thing, like a value-added tax thing. Look, in a way, I think right now, like I said, the big show is specifically about that. And yes, you're gonna impose certain like you're threatening to impose certain big percentages on those goods that are coming into your country. Well, look, let's face it, that your country is a consumer country, and for many years and decades, everybody kind of enjoyed the fact that, in the US, certain goods are very cheap, like electronics, and, we understand all that. So, and there was a reason why it was like that. And that's why the country was always able to prosper, because they could, yes, they overspend on certain other segments, like healthcare, for example. However, let's say these consumer goods and everything, like electronics, these are always on the cheaper side. So in a way, somewhat of a balance. But now, if you're going to actually tax that side as well, you can tax all the clothing, consumer electronics, and these. Then you're gonna get yourself a little bit of a problem in a way. And when I hear the reasoning that you're trying to build more work. Or create more working spaces inside the country, because you think that tariffs will be, will make it less attractive to import into the country, and that's why everybody will start increasing production inside the country, basically creating this made in USA label. I don't think that this is gonna work, because I think that inflation will come first. And again, I might be wrong. I am just going from what I see and from kind of my own personal experience, and I think that this is this could in a way a little bit backfire. However, again, we don't know. Of course, maybe we don't know something. Maybe there are a few elements which are unknown for us. But in general, if we're going from what we have, what we see, then again, it increases the risk of having inflation quicker rather than actually creating jobs. And again, another thing is that your US dollar is low right now, so basically your purchasing power is on the lower side. So okay, yes, it helps to keep the US consumer inside the country, and not to go abroad and everything like last year they did. However, this year, yes, it's it's a little bit more expensive to go to Europe, because we have the Euro USD on high levels. So that's what I'm saying. So that's why it's a little bit of a tricky moment when you're trying to impose tariffs. And then again, like, slamming 50% on Brazil. I don't know. This is a threat, but you get a lot of things from Brazil, starting from sugar. Starting from, like other fruits and vegetables, and I mean, mainly fruits, actually. So lumber, that's another thing. I mean, yeah, it's because everybody can say that, but we have lumber inside the country. Yeah, but this is what rich countries do, is like they don't really spend, they don't really chop off their own trees. They just buy trees from another like cheaper country, and let them screw up their forests and everything like that. We will have our forests, but we'll preserve our forests and we'll buy those forests, let them cut out. So this is what I'm saying. This is what Brazil has been doing. I mean they're not saint as well. I mean that's another thing. Cutting down so many trees. That's, yeah. I mean, okay, good for business, good for short-term business. Long-term, a big problem. Look, like I said, for now, we're watching this game of tariffs. We're watching this shootout, or like I said, this duel between the U.S. and the rest of the world. And again, we have to admit that this is not, it has not come out of the blue or anything. No, this is something that the U.S. decided to go for, stating that they have been, ripped off, and for so many years. I would say this way, that everybody rips off everybody, at some point. So you're abusing one side, the other side is abusing you. So everybody abuses each other, and it's just on the one side you're abusing this way. One is the abuser on one segment, the other is the abuser on the other segment. So you're both kind of enjoying each other and abusing each other in a way, which is, I mean, okay, the word abuse could be probably a strong one, but still, you're benefiting from, one is benefiting from on one hand, the other benefiting is on the other hand. So in a way, it's kind of working, so maybe it's wrong. Maybe we could debate that, is it ethical or not ethical? That's another topic. But economically, so far so good. I mean, it was working, because again, yes, you can produce a lot of things inside your country, but let's face it, I mean, sometimes, and actually sometimes most of the time, you might not have the skills and the know-how of how to produce a certain good. So that's why, and also this week when we heard the tariffs going up on copper, I mean, so you need copper for everything. Like, you have like an electronic device, that's it. Wires have copper, and that's the best conductor. So you're imposing tariffs on 50% tariffs on that copper. How you're gonna, you need that for production inside, if you're trying to produce inside your country, but you need that copper to and you're in a way taxing yourself. Yes, big exporters can also be hit because demand would fall, but okay, there's the rest of the world. They might not sell it to one country, but yes, they will take a little bit less profit, but at least they will continue operating. It's US is not the only market. Yes, it's one of the biggest ones. They consume a lot, but it's not the only one. So again, it's like it's an interesting political game. I think that the whole point of all this is just to have like a little flat tax on all imports, and kind of that's it. So you're threatening here, and your threats are here and there, and actually those are, like I said, shifting towards you first, you go through the big mess, you show that this is what you can do, and then basically you eventually put the flat tariff. Like right now they're imposing between 15 and 20% flat tariff, and like instead of the 10% that was initially agreed on. So yeah, I mean, I think that, like I said, that is the ultimate goal. Let's see how that plays out, of course, and if it's not going to damage the economy. So yeah, for now, let's see. But Japan, yes, Japan is also on the negotiation side, and they're also trying to negotiate at least something. Well, look, all these things, of course, are kind of damaging the partnership in a way. So your strategic partners, Japan, South Korea, you're really damaging the relationship in there. So, and again, we'll see how that plays out, of course. But for now, the reaction that we're seeing here on Nikkei this week is quite logical, to be honest, because look, there is a threat, but nothing has been implemented. So we're seeing a decline, but not a major decline. I would say it's more of a correction. So for now, we remain above these two little trend lines. Yes, the this downside resistance line taken from the highest point of July of this year, and we're also above this little short-term upside line taken from the low of the 23rd of May. So look, I'll say it this way: as long as we stay above the crossroads of these two lines, I will remain cautiously bullish. And if we do clear the 40,620 territory right here, and I'm talking about the cash index here, then yes, I'm going to go for this 42,493 territory, and then we'll take it from there. Yes, that's the highest point of 2024. So yes, good potential target. Let's see if we could, we could end up traveling there. Long story short, for the downside, I would need to see, probably this arrow needs to go, and I would like to see a drop somewhere below this 38,771 zone. I talked about it before. It was a good area of resistance. I said that if we clear this, I'll go higher. It worked. Now I will keep an eye on the same area around this level for the downside. Let's jump into China very quickly. Yeah, it's a roller coaster ride. Look, in general, economic calendar, let's take a look what's happening here, ladies and gentlemen. Let me just refresh the calendar very quickly. So, yes, look, this week, did we get anything exciting? Vehicle sales in China increased. Okay, that's interesting. Apart from inflation, yeah, inflation, we had this one. So it came out higher. The year-on-year figure came out higher. The month-on-month actually improved as well, but the year-on-year managed to jump into positive territory. That is wonderful in a way. That's kind of showing a little bit of growth, and that's why we saw this nice little push higher. But I think today's retracement is more related to the new tariff threats from the White House. So again, technically, from the technical perspective, we popped above this 13,800 zone, this highlighted territory right here. That was great, but look, we're kind of drifting back to it. Look, I'll say it this way: as long as we stay above this hurdle, I'm going to continue targeting the upside. If we somehow fall back below it, I'll take a pause. But if we break this upside line, taken from the lowest point of April, then yes, I will consider a move to the downside. Let's jump into the US, ladies and gentlemen. Dow Jones Industrial Average. Let's have a look at this one. So this one is a little bit on a pause, and I think that that's okay. That's logical because, again, we're in this undecisive period. There are some positives that are coming out. Well, in general, there are negatives, yes, but there are also positives. The market in general is working. We just don't have maybe much data this week. Economic data. We do have a few pieces of information here, but we had consumer inflation expectations 3%. That's what everybody's thinking of. I mean, they're thinking towards the lower side. EIA crude oil stock change came out, so nothing kind of major there in terms of data. Yesterday, again, there's not much. Wednesday we had the FOMC meeting minutes. I wouldn't say that something like extra. It's something we found out something new in there. That are they planning to stick around and kind of wait for better times? Yes. I mean, still we don't know if they're gonna cut or not cut in July, at the end of July. The only thing is that we can judge at the moment by the CME. CME Fed Watch tool here, and basically we can say that at the moment we are not expecting a cut. And to be honest, my personal opinion on this, I don't think we are seeing some Fed officials, Fed committee officials actually coming out in favor of the cuts. I don't know if they were bought or not bought. I mean, if the current administration kind of they were pressured by the current administration to say these things. But in general, I think that what Jerome Powell might say is that, no, I'm not going to cut because I see what's happening in the economy. And to be honest, you don't need a cut. You don't need to raise these inflationary problems right now, because if you're going to drop the rate, yes, you're going to make lending more accessible. So meaning that it's going to be cheaper to buy money. So that means you need more money, and you can actually make the US dollar even lower. Um, so, but I think that what the Fed, what Jerome Powell might do is just, stick to his plan, because if you know that you're gonna go next year, and most likely you're gonna go next year, because again, because of politics involved, because of these attacks, which I already did some webinars on. By the way, you can check out our trading view page here as well, because I do throw out a regular video updates here, little short video updates, and one of the latest ones that got picked up by TradingView as trade editor's pick was this one, PCE and attacks on Powell. So this is when it kind of mainly started escalating. So you can have a look at that one. And oh yeah, and by the way, looking at this chart here, this is Dow Jones Industrial Average. Look at where we were here, and this is what I was saying. I'm targeting this area. There we go. So this is how much we've traveled so far. So good. Everything is working out beautifully. Look. Long story short, like I said, with the interest rate decision, I would say, yeah, July, I think it's a done deal. We're gonna have no action, no cut, no nothing, unless it's gonna be a surprise like RBA did this week. But okay, it was a little bit in the opposite direction. They just didn't cut, but they were expected to cut. But I think that yes, we will stick to this Fed Watch tool, and I think for now it's correct. And like I said, if I would be Jerome, I would be doing probably the same thing. I would be just staying calm, staying on my course. Yes, you get criticized by the current administration. However, what's new? Right? However, what's new? And look, I think that, like I said, I think that this is where it's gonna go, and I think the market understands that. And this is what's interesting, is that the market, I think, kind of supports the Fed in a way. Kind of supports Jerome in this one, and because if you're going to start cutting now very quickly, because we do have these tariff related issues which could cause inflation, which I said before in the beginning of this video, which could cause inflationary pressures. That's where, like I said, that's where it could backfire if you start cutting too early. Of course, I understand that cutting rates helps the White House administration to lower down, the U.S. dollar, make it lower, make it, let's say, more expensive for outsiders to export into the U.S. or for U.S. importers to import. It becomes more expensive. Maybe that's the whole goal. So you're trying to create that production by using these means, which in a way could backfire. But it's, probably their reasoning is that if you won't try, you won't know. Anyway, ladies and gentlemen, looking at this situation here, I'm still somewhat positive here on Dow Jones Industrial Average. I still believe that it could go for the all-time high and could hit that all-time high. But I'll say it this way: as long as we stay above the 44,000 mark. If we stay above the 44,000 mark, yes, I'm continuing to target the upside. For the downside, if we do drop below that 44,000 zone, this could lead to a larger correction back down. Why I'm saying still correction? Because we are still above this upside line. So in a way, a clearance of this upside line would be needed, but then of course the next step is to watch out for these EMAs wherever they're going to be. So for now, we're just like I said, observing the price action. We're cautiously bullish as long as we stay above the 44,000 zone here on the cash index, and then we'll go from there. S&P 500. So another new all-time high yesterday. Look at this, new all-time high on the S&P. This one is This one is buzzing together with NASDAQ actually. And the market in general is not bad. It's not like doing worse or something like that. So that's why you don't really need to stimulate it with lower interest rates. It's just that it's maybe not, let's say, growing that fast because, again, we have these tariffs. But again, somebody might say that's helping to keep it in balance, not to create some sort of a bubble. True. I'm not going to argue there, but again, it's always a stick with two ends. For now, from the technical perspective, I'm seeing a little range here since around the beginning of this month. And I need a clearance of the 6,285 territory somewhere here, although this is not the all-time high. But yeah, I think it's a good barrier because look at this. I mean, we kept on testing it. We overshot it yesterday, but we failed to stay above that. So, and today we're seeing a little bit of retracement due to the increased tariff wars. So I need to see a push above the 6,285 territory again. If we can get that move, I'm going to go to the upside. For the downside, a drop below the 6,200 area would be great. If we can get that move to the downside, wonderful. I am leaning a little bit more towards the downside. Nasdaq in a very got stuck here with the words. It is in even of a more tight range than S&P 500. Look at this. I mean, look at this. NVIDIA stuff is not even helping this one to get out, but it, of course, it's helping the index to remain afloat. That's for sure. Yeah, looking at this picture here, the 22,900 zone on the cash index. I need a clearance of that one. That's not the all-time high, but near that. So. Yeah, let's see if we can get that pop again today. Look, if we don't see like the body of this of the daily candle remaining outside of this little range today, then that's one of those weeks that we're gonna get, like one of those flat weeks, maybe like a doji formation or something like that. Maybe we're going into next week, we'll see some sort of more interesting things. And by the way, in terms of more interesting things next week, let's have a quick look. Monday, it's dead. Monday is dead. Monday, not much happening. Then we're going into Tuesday. Tuesday is going to be the more interesting part. It's going to be the U.S. and Canada inflation numbers. There we go, ladies and gentlemen. Something for us to keep in mind. And at the moment, we don't have a forecast on the U.S. and Canadian year-on-year and month-on-month numbers. But look, let me just. And these are, I'm talking about the core, the US month on headline inflation. Let me just launch the chart here. There we go. So you can see that it has been kind of drifting modestly or mildly to the downside since around kind of June 2023. Before that, we were seeing a sharp decline. And that decline came after like June 2022. So that sharp decline up until June 2023. So for 1 year, we were sharply declining. Then we stabilized. For 2 years, we kind of, shifting lower, but steadily. If you would ask me to apply technical analysis on this chart, although we should not be doing that, but anyway, for me, this looks bullish. And a breakout to the upside here could be possible. So basically, in a way, it becomes something like this here. So this, I talked about such patterns before, and I'll probably mention this again, because whenever we have a sharp decline and then a gradual decline, it seems like the market is building up for a breakout to the upside. Like I said, it happened many times. If I'll get one of those scenarios again and one of the instruments which I'm analyzing, I will mention that. But at the moment, this is, like I said, this is my problem. This is where my issue is, that inflation could pop nicely to the upside here later on. But again, as always, I keep on saying, even from a technical perspective, a break through the upper side of the falling channel is required first before examining higher levels. Again, I strongly recommend not to apply technical analysis on something like this. However, let's call it for fun. And yeah, like I said, NASDAQ 100 waiting for that clearance. And if we do drop below that 22,583.84 zone right here, I'm not saying that I'm going to be, let's say, suddenly very, very bearish. No, I'm going to aim for a larger correction back down, maybe even towards this, like I said, 50-day EMA, wherever it's going to be. US dollar index, let's have a look there. Ooh, interesting, interesting. We are clearing this downside line and very, very casually, calmly pushing, or at least trying to climb higher. Okay, but as I said to you before, that for me, this is not enough. I need that jump above the 97.70 territory. And if we can clear this zone, if we can clear this 97.70 area, then yes, wonderful. I will go a little bit more towards the upside. Not much. Initially aiming for the 50-day EMA, the 98.65, but then yeah, we'll take it from there. But for now, I'm just aiming for this area right there. For the downside, if we do remain below the 97.70 zone, then yes, I will, like I said, I will keep an eye for some lower levels. At the moment, we're playing around with the 97.70. Let's see if we can clear that. If we struggle, maybe this has been a nice little false breakout, because on the weekly you could see exactly that. If we did get that, you know, move on the weekly here, a false breakout, then hey, the downside scenario is not off the table. Keep your eyes on this one today. Let's see what's going to happen. Let's jump into Europe very quickly, ladies and gentlemen. The German index DAX, and look at this. I'm looking at the main index here, and we are open, and we are open. Yesterday went for a new all-time high. Look at this, boom. But amazing. Look at this. I'm loving this. I'm loving this a lot, and I'll explain why. I keep on saying to you, and if you have been watching my show this for a while now, I keep on saying, whenever we go for an all-time high, whenever we clear the previous all-time high, if we struggle to remain above that previous all-time high, doesn't matter, sometimes it could be in the same day or maybe the same week, because again, sometimes it can be unclear. Maybe, you know, during the week we could get some, you know, positivity, but at the end of the week, if we go for a new all-time high and then we struggle to remain above that previous all-time high, looking at this weekly chart here, to me, that looks like a little bit of a bearish indication. And at the moment, look, I'll say it this way. If we do push a little bit, you know, higher here, but let's say we struggle to, again, stay above this 24,479 zone, then I will consider actually a reversal back down. Because for me right now, the upside scenario, basically, that could come on this break here. Let me just adjust this very quickly. There we go, there we go, there we go, and there we go. So 24,639, this is where the current all-time high is. If we can clear that, then I'll go to the upside. If we can, you know, if we can clear this area, a forthcoming higher high will be confirmed, potentially attracting more buyers into the game, and then we'll see. But again, for now, like I said, it's just it's an interesting point here, and in all this whole problem with all these tariffs, of course, there's not allowing you know, for kind of to grow steadily. So maybe the market is kind of worried right now a little bit because of the, you know, the new threats that some U.S. partners received a new higher tariff, like Canada, for example, and that's where maybe the EU is kind of worried a little bit, because they're still working on a plan. You know, they're still trying to make it to that 1st of August deadline. In general, like honestly, I forgot to mention, but I mentioned that in my previous sessions, that you had like everybody had 90 days in general to, you know, for things to happen, but nobody kind of did anything, and it was last minute thing. Look, I don't know if there's going to be a new agreement done right now, but of course we're continuing to watch the show. So let's have a look at the FTSE 100 very quickly. Beautiful move, beautiful all-time high yesterday created. A little bit of retracement, so far so good. Look, we're in uncharted territory, I would say. I'm going to continue targeting that 9,000 zone, and then we'll take it from there. Let's jump very quickly into the Forex world. I just wanted to quickly update you on this. I'm not going to spend too much time. Look, in the beginning of this week, before the RBA interest rate decision, we were drifting lower, we were selling off, and then I said, look, wait, don't rush. And in general, I said we are in this rising wedge pattern, which, of course, according to all the TA rules, tends to break to the downside. However, I said to you that we look at the prevailing trend. The prevailing trend was to the upside, and there we go. We could be seeing this one actually breaking out higher at some point, especially if the US dollar will continue to slide. And the fact that we didn't get a cut from the RBA, so in a way, everything is still somewhat positive. So I also did this piece on AUDUSD recently. Where is it? There we go. That's the one. Surprise hold by the RBA, a positive for the AUD. So, and this is what I talked about. So you can just like my video myself right now. Just very modest of me. Look, this is, like I said, this is what I'm talking about here. This is what looking at here, and again, it's looking quite positive, so there is a chance for this one to actually pop higher. That's why I don't believe in US dollar strength, at least for now, despite that little violation right now here of this downside line. Let's keep an eye on the weekly chart. Jumping into AUDJPY, risk on seems to be in the air, and yep, everything is pushing nicely to the upside. So far, the technical picture is working out. As I talked about this, I said to you that, look, if we clear this 200-day EMA, I'm gonna go to the upside. Where did I mention this? This was NZDJPY, which I'll get to in a bit. AUDJPY was a while ago. Where did I mention that one? Yeah, somewhere recently it was, I think. Yeah, let me just double check, because again, like I said, I think I did mention this one recently. AUDUSD, that's one, but AUDJPY, I think it was a while ago as well that I've talked about this one, and because like I said, I was really somewhat positive on that one. But okay, there we go. No, this is a different formation here. Right, maybe this was in one of my webinars on YouTube. There we go. Yes. So look, long story short, for now I'm aiming for this 97.32 territory area, not exactly the level, but more of an area around that level. So let's see if we can reach that one. NZD/USD, a little bit better than previously, but still not as great as AUDUSD. So I'm going to stick to my scenarios here. First of all, this worked out. This arrow no longer needed. Now I'm looking at the 50-day EMA for the downside, wherever it's going to be, and the 0.6048 on the upside here. If we do clear this, I'm going to go a little bit higher. NZDJPY, there we go. Pop. Now this one for sure. I mean, I talked about this one recently. I mean, let me just have a look at this one. Gold dot, polka dot, and yeah, there was this one recent. NZDJPY, there we go. This was the idea that I mentioned here. I talked about this, so there we go. We're having a beautiful pop here. So ascending triangle worked out. So hey, no questions asked, no more. At the moment, I'm targeting this 89.69 zone, somewhere there, and we'll take it from there. USDJPY, I said to you, I talked about this. I said that, look, there is a possibility for an upside, but for that, I need to see a clearance of that 100-day EMA together with the 146.28 zone. We cleared it. Now my next target is the 200-day EMA together with the 148.45, and then we'll take it from there. For the downside, a drop below the 50-day EMA would be required. US dollar against the Canadian dollar. I am leaning a little bit more towards the downside, to be honest, despite the recent up move. Look, while we remain below this downside line, below this downside line taken from the highest point of February, I will continue targeting the downside. However, my preferred scenario for the downside is on a drop below the 1.3539 zone right here, and then we'll take it from there. USDCHF. USDCHF is great here as well, I would say, and Yep. Again, similar story. It's just kind of a copy of DXY. So, I think that what I would like to see here is a drop below this territory, the 0.7871, and then yeah, a forthcoming lower low would be confirmed. EURUSD, keep your eyes on this one, ladies and gentlemen, because again, so we found resistance near the upper side of this rising channel. We're drifting back down, so fantastic. We're testing the lower side right now of this rising channel. The channel is, we're not giving up yet on the channel. Basically what we're going to do here is we're going to do something like this. So we're not going to give up on, like I said, on the upside scenario here on this rising channel, but if it starts clearing this lower side of it, then yeah, I'm leaning for a little bit of a move to the downside towards the 50-day EMA. Let's keep an eye on it. Today we're seeing, where's that economic calendar? Today we're not really maybe getting much stuff from the world in general, but I think that there will be some negotiations on the tariff side. So just watch those headlines very carefully in terms of what's happening with the negotiations between the US and EU. EUROJPY, yep, this one's somewhat positive still, so we can continue to. It's a great move to the upside. At some point we'll have to correct lower, but I think that for now, what we can do here is maybe keep an eye on the current low of today, or actually even the current lowest point of this week. Is it? No, wait, this is Monday. Yeah, this is, sorry, no. The current low of today, 170.80, a drop below that, yep, could lead to a larger correction back down. Very quickly on GBPUSD, because I still want to go through commodities. So this one continues to slide. So far, so good. Look, I'm not saying anything. A drop below the 1.3632 is, yes, it has opened the gateway towards slightly lower levels, towards the 50-day EMA. That's what I'm aiming for, and we're going from there basically. So for now, long story short, we are looking at the 50-day EMA here. So let's see what's going to happen there, if we're going to get a little hold up here or something like that, and we'll go from there. But for me to get very bearish on GBPUSD, I need to see a break of this upside line taken from the low of the 13th of January. Very quickly now on gold. Gold is popping, rebounding beautifully from these two trend lines. I talked about this and I warned you, but hey, somebody might say that let's actually examine all options, the upside and the downside scenario. For me to start shifting my attention to some higher levels, actually I need to see a push back above the 3,365. Here, it's not bullish for me yet, because if I'm judging from this little formation, this kind of looks like a bearish 3 method. A big candle to the downside, 3 consecutive candles where their bodies are within the first candle. The 5th candle to me smells like a corrective one to the downside. I don't know if it's going to happen today. Maybe it's going to stay like this, but maybe on Monday we could see a drift lower. But again, it's a theory. It's just an idea. Maybe actually it could just drift lower straight away. But that's why I'm allowing this one to walk a little bit. I'm not really jumping into anything positive until I see a push back above the 3,365 territory right here, and then we'll take it from there. If we can get that move, we can get that break. My next target is this area near the 3,430.40 levels, and then we'll take it from there. For the downside, for me to get very comfortable with the downside, a break of these two trend lines is needed, because at the moment we're forming something of an ascending triangle pattern, so which tends to break to the upside. However, for that pattern to be, for us to kind of consider that pattern, we need to break through this 3,430.40 area, but at the moment we're further away from there, so we're trying to deal with this story first. Silver, oh, very nice, pushing higher. There we go. This one's looking a little bit more promising than gold, to be honest, and this one's going for a higher high right now. I talked about silver recently, so you can check out, like I said, this this idea which I talked about. This was this one right there, so it was posted 6 days ago. So there we go. We are now shifting, yes, nicely to the upside, and let's see if this is gonna clear. Sorry, it's already clearing. Let's see if it's going to stay above this area. And if it does stay above the 37.30 zone, I'm going to continue targeting the upside. Palladium, just a quick glance. Beautiful. Everything is pushing higher towards that 1,250, slightly above 1,250 area. And yeah, we'll go from there. This is going to be my area of resistance. Let's see what's going to happen next. Platinum. Platinum is, look, it's also somewhat positive, but I think what I need to see here is I need to see that break up of the current highest point of this year near the 1,446.5 zone. If we can get that nice clearance. So far this is working out. This curved arrow here is working out nicely, but yep, a break of this territory of this 1,446 zone is needed. Copper, our beloved copper. Now this one's calming down a little bit, and I think that it is logical that it's calming down. I mean, come on, you're really going to put 50% tariffs on something that you really desperately need for your U.S. businesses to thrive? Come on, honestly, like you're not going to be on time to develop these new places, you know, where you can, from where you can get copper. Yes, you can probably get copper inside your country, but do you have the infrastructure already ready? No, but I'm really, like I said, anyway, it's a show. It's a beautiful show, and you know we're working on that one with that one right now. But anyway, yes. Look, if you would have set up already everything ready to, you know, start production in your country, then yeah, impose the tariffs, but do whatever you want, you know. But then it would be at least, okay, it wouldn't be logical, but at least you could justify it somehow. Now, I don't know, but that's what I'm saying. That's why I'm not a believer. I believe that it could go towards maybe 6 territory just on this momentum right now, on this fear thing, but it will fade away back down at some point. WTI oil. Good hold up near the 200-day EMA. I talked about this on Wednesday. I said to you that if we do stay below the 200-day EMA, I'm leaning a little bit more towards the downside. However, drop below the $65 mark for me is still needed in order to get comfortable with the downside. That's what I'm going to do. I'm going to stick to that. Let's see if we can get that move. But for now, I'm just observing the price action, not touching this one, but I'm still bearish with oil. Recent update was that apparently OPEC Plus is planning to lower down production in October, not in September, in October, because they're expecting lower demand. I mean, surprise, surprise, right? But basically they're still going to lower down, you know, the production, but only in October. But they're still going to increase production, but in September. So yeah. Let's see. But I'm still somewhat bearish on this. Natural gas. Interesting violation of this upside line. Actually, there we go. We can see that it's not needed. It didn't really work. We have many of these things that don't work sometimes, so we just go back to the drawing board. At the moment, I'll say it this way, that I will go for the upside if we do clear and if we do bounce back above all my EMAs here on the daily chart. If we stay below the 200-day EMA, I think this move higher could be classed as a little temporary correction before another possible leg of selling. Let's see how that's going to play out. Coffee. Very quickly on coffee. It seems like a possible reversal signal, but I need to push back above the 290-93 zone, somewhere around here. And then I'll consider a move higher. Cocoa, yep, still in the falling channel. I'm still targeting the downside, and I'm still considering something like this. Wheat, okay, we're jumping back above the 200-day EMA. It's a bit of a roller coaster ride on this one, but an interesting one. Sugar has drifted back below this hurdle, back below this 16.45 area. That's interesting. So on a weekly, yeah, okay, it looks quite interesting actually. On the weekly, it's like now negative. But look, if we somehow push back above the 16.45, I'm once again aiming for the upside. Cotton, my beloved cotton, still remains in between the EMAs, but I need to push back above the 200-day EMA in order to get a little bit more comfortable with this scenario. And let's finally look at Bitcoin. What's happening here. There we go. There we go, ladies and gentlemen. I just recently did a video. Well, actually recently, yesterday. Where's my crypto update? That's the one. There we go. You can check it out. For the BTC test the highs, and I talked about this one, and I said to everybody, look, of course, don't get me wrong. I'm not the one who kind of foresaw the future or something like. No, it's just I was bullish on this one because I said, look, for now we're very technical here. We pushed above that all-time high, the 112 zone yesterday. We stayed above it, and today we're continuing. I said to you, my next target is the 122 area, somewhere around there. That's where I'm going to aim for, because that's around 78.6% on the Fibonacci extension, which so far has been working like a charm, because I managed to get this target here, the 112 zone, because I measured it from here. And whenever, when we surpass this previous all-time high, I said that this is where I'm going to, aim for initially. Beautiful. Let's see if the 78.6 is going to work out. I'm going to be like happy, like I don't know, like what, happy, like something like very, very happy. But if this is going to just stall near the 122 zone, let's see what's going to happen there. At the moment, I'm bullish, and like I said, I'm gonna, let me get rid of this. I'm bullish, and I'm aiming for that area. For the downside, if this suddenly starts reversing sharply back down, I will consider some lower levels if we do drop below the 112. Yep. Bitcoin Cash. Bitcoin Cash approaching key resistance 526.64 here ish, so we can round it up here to 527. A clearance of that could open the door to some higher levels. Ethereum, boom. I talked about this as well in this crypto update, but also I talked about this idea recently here. Where's that Ethereum? This is what I was talking about, these cryptos here today: Litecoin, Ripple, Dogecoin, Polkadot, and Tron. Ethereum somewhere here basically. So there we go. That's the ones here. So that it's an interesting situation. Look, we're positive. Of course, it's getting dragged by Bitcoin, and everybody's buying cryptos now. So look at this. I mean, this is fantastic. Ripple ripping nicely to the upside here. 2.65 is the next target for me. Let's gonna see what's gonna happen there. Litecoin, so far so good, beautiful. I talked about this pushing above the EMAs. If we stay above those, this is not from here. I was saying that I'm going to be bullish from here. There we go. So far so good. Dogecoin, beautiful move after we broke this downside line. We are now we tested now the 200-day EMA, and this is where I'm going to stall. Actually, this is where I'm going to take a pause. If we do stay above the 200-day EMA, I'm going to go higher. Yes, I'm going to go towards these targets here near the 0.26 zone. But first, I said to you that I will aim that area near the psychological 0.20 zone. Polkadot, beautiful pop. There we go. Amazing. Pushing higher. Everything is on the hype of this. So so far so good. Looking good here. And I'm gonna aim further north towards that 4.3 zone, somewhere there. Of course, the psychological 4 level is the one that I'm watching first, and then if we clear that, 4.3 is the one that I'm watching next. And Tron, finally, there we go. Mission accomplished. Mission accomplished. I talked about it, and I said that if we do pop above the 0.2786, I'm gonna go higher towards the 0.2939. Boom, boom. And what can I say? So far, so good. I will look. I'm not going to say that I'm going to go further north on Tron here. No, I think I like Tron. It's more of like a normal currency pair here. So I'm just going to chill. I want to see what's going to happen next, how it's going to behave near this 0.2932 zone. If it's going to stay above it, okay, we can go for some higher levels. We can go for that psychological 0.30 zone. But if it doesn't, then yeah, I'm going to maybe consider a little bit of a retracement back down. Ladies and gentlemen, thank you very much. I would like to thank sincerely you for joining and watching my webinars this week. Look, that means a lot to me, so I hope you find them useful. Thank you very much, everybody. I hope you will have a fantastic trading day today. As always, I keep on saying, ladies and gentlemen, that if you have done already good this week, and because we have such such uncertainty, if you have done, in your account is looking quite nice this week already, then try to maybe limit the amount of trades that you do today on Friday, because we sometimes can get, let's say, one-way traffics, which can, take you out if you're on the wrong side. And just kind of, approach it approach it very carefully. Of course, if you still want to enter a trade, then okay, look, do minimal size if possible, just to kind of be on a little bit on the safe side, but enjoy your profits. I keep on saying, enjoy your profits. So thank you very much, everybody. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Monday. Bye for now.